My friends, and welcome to the Breakfast Club. My name is Darren Hancock, and this is Monday, 16th of March, 2026. I hope you all had a great weekend, and let's get to the markets. All right. So our today's 8:30. We've had a nice little run back up into the new week opening gap. Is that a new week opening gap? I think that's a new week opening gap. Nope. Sorry, I have to go searching back here, find out what that one was. I'll get rid of these. Can't get rid of everything all at once, otherwise it'll take away some essential ones I'm looking for. This can go. Here we go. That's today's. Now we're back on track here. So we're right up inside this last up close candle. I don't see any. Nope. Get one more little pop up there, perhaps. 700. 700. 728. 728. I'll put us right in here. Okay. Let's see where everybody's at here. Close this thing down. Good morning, Hadi. How are you doing, my friend? How's everybody? I'd like to see us get back into here. How's Daniel? How's your lovely wife? How's the family? Everybody safe, I hope? All good. Yes, good. Excellent. Yeah, we're good. Yeah, one more week and we're off to merry old England. For a retest here and then send it back lower. I don't want to see your 830 get hit again. You've already hit it once here. Just keep sending it lower. Yeah, I'm doing all right. Well, that dizziness is all gone now, so that's kind of good. Gave my neck a rest. Did the old heating and stuff, went for massage. And if Shepard's got to put up with that stuff a lot with his neck, man, I do not envy that guy. That is not fun. The scary part is you get out of bed and, our bedroom's right at the top of the stairs, and kind of in the morning, it's like pitch black. So you're wobbling around. It's like all it's going to take is just one wrong step and you're going to come tumbling down the stairs. So you got to go slow, man. And I'm getting older. So, all right. So let's look at, I like NASDAQ right now. It seems to be, if we can just keep this 60 or 658 level here, which we've just got, if we can keep that on the 5-minute and continue dropping down, we've already got the turn on the 1-minute. We've got a premium. We're looking for some support off of here to come down lower inside the large one. So you have the mean threshold, the rejection block, and the wick, middle of the wick, consequent encroachment, and the high to concern ourselves about, or concern ourselves with, for going higher. Or I'd like to, and in order for that to start happening, we have to see this break again. Right now we've got the turn, and as long as we get the confirmed turn on the 5 here, we can look for the 15-minute for a fill, a take. What candle is that there? Yep. If we can get a close below this candle here and this premium, we're going to look for a continuation, another run back into this range here. Somehow I don't think we may just see a little tag inside here, 50%. Seeing a little pop up in here. We're changing direction again here. We get one more little pump up that we were looking for in the hourly. We've just got a small little dip into this. Let's see here. We have no turn. We have no body below here yet. We've just got the body that stops at the same spot. So our false dive. So watch this. Wait for us to get back above here. We get into another buy scenario here. We should see at least 9 give us a run up higher. Previous day's high on Friday. Yeah. There's a lot of PD arrays to reach for before we get there. But yep, that'd be a good expectation there, Hadi. Just remember that 1 hour first. And 7:30 would be your 4 hour. That's a nice little tag right there. Let's send that one up higher. Put your stop loss below here. There. And put one more right there. Be just below that. $8.30 sits us right on top, just below this candle here. I don't want to see the half that wick get close below. Otherwise, we're looking at this, which we're already inside it anyway. So if we lose that one, then we're going to come back to here. We gapped below it. Just tag it and go. That'll give us that last little piece right here. And we're just sitting below it. So that's all we're giving it. That exact spot right there. And it says, nope, I'm heading for this guy here. Look at that. Now it stops on 8:30. It just wicked, gave us a little bit of shenanigans on the wick. So now I want to see us get back above here and use that as support to go higher. Wait for it to get out of there. There's the retest of that little sucker there. So now what you want to see is it come down here, find some support at this, then come back up or use 830 to keep moving up higher. This is the little box you're looking at right now. Whilst we're here, we might as well start looking at some of these other ones. I'm interested in having a look at Forex this week. I'm liking this rejection block up here. Well, Dow is sure bouncing off those two levels, hey? No major shift in oil price yet. We start getting below these two levels here. You can start targeting back in the $88. This is the that's the 5 minute right there. This is the 1 minute right here. So there's the tag in. You're looking for that to go higher now. I want to see a body get above here first, though. That's our first turn. Next turn. I want to see a body get above these two here, then you start looking for a run higher. Going higher. So as you get close through here, 50229, look for a continuation on the upside using model 3. If we don't break this high, look for a retest back here in silver. 79,555. I would expect to see something like that. It's 555, 558. Wheat still looks good for higher. I want to see the bonds dip down into that weekly one more time. They give them a retest and then send it higher. Leave this portion open and send it higher. So they're looking for bonds to drop down a little bit this week. And we're looking for maybe Tuesday, Wednesday low, and then send bonds back up. Here we go. If we're looking at all three markets here, I've got them all. I've made separate ones for each one of them in case we are going to work them this week. So that's a retest right there. Now, I don't know how much you usually trade on here now. It's been a while because I know it's different. So right here, we are in, I'll get to that in a second. I just have a look at which one's the Euro's picking up the pace here. Dixie's on a turn. We could see this pop back up into here. See if the next 4 hours we get another little run back up higher, look for an institutional order flow entry drill here. Or if this candle starts to reverse, I want to see us tag here without filling that in. But the problem is the next 4 or 8 hours, we could see a return back into this civvy or all the way back up into here and retest this before going lower. So British pound. Let's put this as the hourly, this or 15-minute. This, let's get rid of these buttons here. Wait a minute. So inside this range we just got down here right now, there's still lots of chop going on in British pound, euro. We haven't broken anything here, so I'm expecting to see it. And we went here and now we're starting to go back up. So I'd like to see us either continue accelerating out of here or come back and retest this it's already done that. If we stop at an institutional order flow entry drill, which we haven't got just yet, but if we can just dip back into 1469 all the way down to 1462, 1461, I'm going to put my line down there. I don't want to see us get any lower than that. We're on a turn here, which is good. Now you want to see this hold and not turn into a no-go zone here. Right there. That's a box to box trade right there in the last 3 minutes. There's the midpoint, nice sensitive point. Trading A3 price on indices. ID, what are you doing? Lucky dog. Doing well. Thank you for asking. Good morning, Lucky Dog. Might have to, oh, this is US dollar, not pound. Why did I have this as pound? I know it's euro. Looking up here going, that's US dollar. No, it's euro. It's correct. See if we can get back through here. And we're targeting 1491. And 1451. Or 151. I think that's what it was. 151. I'll take a buy there. It's only $1 or $2. You turn that into a million or something. Right now you're targeting internal range liquidity, so you're looking for up here. And then you look for your Model 3, 4 to continue going higher. So you're just targeting this range, and I'd be looking for the midpoint there. As soon as it pops through there, we're going to move it to break even. Start targeting here. Not that I take any off because there's nothing really on there. So you move to break even. You got a risk-free trade now. And we'll just see if we can't, we could just bang around inside here. So please pay for the trade here. I don't know how much that would be. So you're in that zone. Now you got to wait for it to get through here. Not just come back and retest this. Probably going to come back and grab us out here. It got to be just below that. You can see a retest on the high here. You're going to see a body close above it, which we did. Retest the high or the close. I don't want to see the mean threshold get tested again. There's no reason for it to really reach down into here. It's already done this, so this should go higher. If it comes back and tags that mean threshold, a tiny little point there, that's the no-go line, and we're right above it. So I'm just expecting this to keep running up into that midpoint and then start working that higher and higher. So we'll see. If it comes back and takes me out there, I'm going to wait for this to get broken to the upside before I enter that again for Europe. What is this stuff? It's like 4 million or something. That you see right there is what you want to see on the euro. There's a retest. Now you want to see that go higher and not just hit the rejection block here. So when you got that and rejection block so close to one another, just wait. Just wait. This you want to see climbing up as well. I want to see that start taking out these highs here and using this as support. That's the nice little Model 3 there for range extension. But because it's so close, you're looking at the midpoint rejection block turn on you again. Then your stop loss has to be just below here. And yeah, it has to be just below here, the midpoint of this candle. Because you don't want to see this constant repeat tapping of this level. It's how they're going to touch it and go. So there's your rejection block. So there's always the inherent fear that we're just going to touch rejection and roll over, right? Especially when it's that close. You have to say to yourself, am I willing to siphon just a few pips out of this for euro? Good morning, Derek. And there you have it. That held. So our euro should be, oh, I don't want to see that hold price. Oh, did that take us out? It did take us out. NQ's got a nice little tag off of, nope, not quite there yet. NQ. Yes, that's NQ. It's got to take off out of here now. What's our Dixie up to? Oh, look at that. It came right to my area, tagged me out. Should have left it there. The rule is just leave it one tick below the low of that candle. There's the mean threshold. Got to give it that. I didn't. Too stubborn. All right. Well, that's off and running. So now we're going to look for this high to get taken. So it did come back and get me out. So we'll wait for that level there to clear, which is what the pound was doing here. That's a nice little continuation. Euro should follow. I keep saying euro, that's euro. It's not, it's yes. So far, so good. And I'll just come back and give us a little kiss here. There's a nice little tag. What we don't want to see is this whole leg here get taken out on the downside. So I'm just going to be one tick below that low. Let's go back to NQ. Nice touch on the high. Range extension. Got a nice range extension here. There's a continuation right there. Keep pushing higher. Where were we over here? Euro. We're still looking for our upside objective in, was it pound or euro? I think it was euro. Yeah, up here. Now we cleared out the high. You got to move to break even. And unfortunately, that's going to put us right on top of that. See where our entry is? It's right at the bottom of that fair value gap. So that's quite easily a fill. So you got to give it a little higher run. You've already got the, I'll leave it there. I want to see it stay open now. See, we're equal highs here. This could quite easily come back, refill this, tag this one more time, which is right in the zone. So that's good. I'll take that. If it comes back there, we'll get it back in again. Take a small profit there anyway. That'll at least make up for that little loss we took here earlier. Now I want to see it come back and tag it. Question is, the dollar just, as the dollar goes up, does it usually mean the NQES go down? I might mistake this. No, you're right. You're right there, Fuzzy. When markets are aligned, that's right. Right now, most don't think the markets are aligned in a normal way. That's typically how you would read it, is look at the US dollar, like the Dixie. If the Dixie's pushing down, then all the rest of these should start pushing higher. That's typically how they go when they're aligned. So I think as an overall default, despite what's going on in the market right now, the overall default is that, which is what you have to stick with, really. And where were we at 9:30? And we have not got our retest yet. We've got this little wicks above here. We have no real punch above there yet, so keep your eyes on that. At 1488, you're going to get a nice body above here. Otherwise, this is just a rollover, and we can come back and retag this box down here. And then you can come over here to NQ and deal with that mess. That's slashing back and forth crap, if you're interested. This is a little more subtle. We've had a body above here now, right? So the mean threshold should hold right there. If that gives way, looking for another run on here. I'd look for another test on this, which is what we're waiting for, or what I'm waiting for anyway. I haven't traded foreign currencies for a long time. One might say years it's been since I traded that. But if we stick to the same principles, we'll see how they flush out here. Now, what we don't want to see is this trade all the way through here on a close, because then we've got a turn after taking a high. We've got a 930 turn, and we have a BISI right here, and we have a little market structure shift. So I want to see it's come down a little lower than that yet. Your play still in euro, Derek? This has been, albeit choppy, still working quite nice. Look at that, right back into this candle again. Now, if we use what I was telling you the other day as our marker, it would be right there. Is it right there? It's right there, which is enough. I think I'm going to start using those as a little safety guard. And away she goes. That's a retest. I'll take that. Oh, I think that's my phone. I'll be right back. Let me make sure I put a stop loss in here before I leave, in case she goes ugly on me. Oh, well, it won't be them anyway for euros. We'll move that to break even. That's all right. Hey, $1,200 in 2 minutes. Get paid like a lawyer there. You get paid like Chris. Now, all you want to see is just a tag of that high right there. And if it comes back and fills us, it'll come back and take us out right there. So your $1,000, you get paid $80. That'd be it. I don't want to see that now. That'll be the low of that candle. You want to see a portion of this stay open, but we could see this bounce through here now and take that. So that's the high you want. That's the wiggle room you're going to give it. Now you're out. Because if this reverse occurs here, and we're looking at a 9-10 turn, so you got to be careful for these. So you got to be prepared to catch them. If it turns and that closes below there now, we got the turn. And if you gave it too much room, then you eaten up all your profits. Or you're actually going to take a loss there. So now I'm not interested in this until we see a body break through here again, come back and tag it, and I'll be all right to go long again. This is a retest on this old high here. It's a little swing point. So you want to see that start marching higher. I'm inside this BISI right here now. So that, well, wick, damage wick right to here. You would have had to have set your stop loss way down here if you wanted that to go for our target up here. If you're one of those people that like to give it some room to grow, it just violates my rules. So, and we're getting a feel for euro. See how precise it is. $10 seconds. I don't want to see it break the high. Yeah. No, I'm going to see a retest here now. Nope, didn't get what I wanted. Here, that was a pound doing his pound leaving. Yep. They should follow in here now. I wanted to see that wick come down just a little lower, and then it could have got in on that. So now I'm going to wait for this to break and this to provide some support here. And keep in mind, you have to put your stop loss below this low because this hasn't been retested yet. And if you're all getting on why you should have just left it alone, coulda, shoulda, woulda, I don't do that bullshit. So wait for your precision. You got to follow your rules because, again, if you keep saying, well, you should have, that means you're just flexible with your rules and the market will destroy you. It will eat you up, man. So stay solid with your rules, whatever your rules might be. And if you miss it, you miss it. It was another day, man. We're only just getting started in the week. Change in direction. We've just come back inside this. We have not broken it on the upside yet. And we're looking at a 910, so a 10 could be a little pop up higher. What are we looking at for here? 133.10. Look for a 133.10. There's the body above. There's the tag. Take out the high, we'll move to break even. There you go. That's a zero stress trade. Let it run. So you just wait for your rules to get validated, and then you get back in it again. And don't look at this. Pick your target. Where's your target next? And that was up here, right? That's where we're looking. And if it keeps coming back and taking you out, then pick a new rule, make a new rule for yourself. Get flexible if you want. I don't care. I'm not doing that. So for a euro or for a pound here, you're looking for the first level is going to be 133.11. 133.11 right there. That's 133.11 all the way up for a fill at 133.30. And then from there it can go all the way up to 133.78. How's our euro doing? So you can see that all that, if you're all stressing out over that stuff, you just made $2,000 in a few minutes. I don't know many people that make that quick. So you just wait for your next opening, man. And I haven't made it until I actually hit the sell button. So but we've locked in 600 at least. Anyway. And we've got that. If this creates a bull trap here, or a bull trap, a BISI, then I'm always thinking about time. 10 o'clock. 10 o'clock's the potential turn. So if you're using, depending on your take profit model now, because I've got a range extension, let's say this was brand new highs, right? This was making new highs in the market. People go, well, how do you aim for something? Well, you can do your fib projection, your standard deviations. You can do this kind of thing. And you can say, I'm aiming for, my next one would be right here at 150 or 115. Then you'd have to be 115.07. And then you add the next. So that's take profit model 4. You could be using take profit model 3, which is what I'm using here. Now, if you get to here, we can take $1 million off of that as your first objective. $1 million. Yep. Stand by. You gotta love it. Okay, let's take one off there. We'll take one off there. And so that's 3 standard deviations. Let's go for, so we'll mix a model 4 and a model 3 here. Model 3 is that I want to see this BISI here get closed below. So, and a model 4 is each deviation that you reach, you take a portion off and move your stop loss to the previous deviation that you claim at, which would be 2.5. So 3, if it gets to 3.5, you can pay it in half increments, or you can pay it in full 4-banger. If a 4-banger gets all the way up to there, then you pay yourself on that. If that makes any sense to you guys. You got to understand my take profit model. There's 6 or 7 of them now. So watch right here. That's my model 3 close. And then my stop loss is going to sit right there on that. I'm out. I'm done. So watch that next few seconds. Same kind of situation that we saw here. It came back and took me out. The same thing takes me out again. Then I'll wait for a run above. But it's time now. Time and price. That's time and price right there. So this feels like a reversal time. And I'm keep my eyes on this right here. Yes. let's play it safe and do this. And that's 1492 to 1518. 1492 to 1518. That puts you above there. Puts us above our box. So this right now is where we're working inside an inversion on a daily. That'll put us right smack in the beezer. Yes, it felt like a turn time. All right, now let's look for a retest of this low here. Or you got to get a retest in here. So stay on the candles that you're on, because one will open and closed on it. I don't have a rule for that. We've talked about it many times, whether or not you're going to use that as your own personal rule. I don't. So situations like this, have you missed out? Really? That's a retest right there for a low. I'll wait for it to get back up into, that's an institutional order flow entry drill. I'll take that for one. And then we'll put our stop loss right there. So there's a tiny one right here. I don't want to see us close back above here. I just want to, you can see a wick come up to here. Right there. Find some sensitivity off of that. And then we can come all the way back up and tippy tap that one there. This would be a nicer one if we've got a small little consolidation type thing here. Displacement below us, an institutional order flow, leave you a little portion open and let that keep coming lower. But if it comes all the way back up and fills it, I'm starting to lose less love for this, and I'll take my stop loss off if it closes above that. If you like a 30 minute, that's a good one for you, Derek, then use it, man. So the potential is for us to reach up into here, and we've already done that, so I'm closing that out. Waiting for a retest there. It's going to go higher. If I don't get my retest here, I'll wait for a retest here. That's GPP, so they're right back into the consequent encroachment of the or mean threshold of the last up close candle. So we got to break through here and take out this this downside. You've already reached for the discount array right now. Premium is far up as it can go. Your line in the sand is right there, literally on the line that we drew earlier. And now you want to see that take this out here and use this as an inversion to go lower. If it does, right now it's using that to go higher. So if we break through here again, look for your Model 3 extension. Right now this is the Model 2 continuing up. Then look for Model 3 as a retest and go higher. So right now you're bullish in Euro. And we're bullish in Euro. I'm going to go bullish there. And stop loss is to go here now. As soon as it gets to rejection block, you got to go to break even. Now retest and send it higher. Don't come back. I'm just below the midpoint of this candle here. And I haven't got a body above here yet. So if this reverses and comes straight through me, then you'll see why rejection blocks are a real pain in the ass, or save your ass if you're not careful. If you don't have a rule inside a rejection block, think about that. Think about how you're how they act inside there. Watch how they act inside there. And don't judge what happens after the fact. Just watch what happens in here. That's your study area. That's why your stop loss has to be like, if it decides to rip back through it against you now, that's your safe, fail safe. I call it a fail safe. And now you want to see it break this high and then use this candle. I want to see it close above here. A nice distinctive bull candle above that would be nice. If it doesn't, if it's too much chop, then we're getting back into chop and it's not something I'm interested in. So we're waiting for real distinct price action. And this is my first time in Euro in years. So especially in Forex. Okay, I think I'm going to wait for 30 minutes, especially in Forex when getting 5 or 10 pips isn't my objective. In equities, if I get 10 handles or so, I'm happy with the trade. See you later then, Derek. See, the high's not taken. So we're back into the midpoint of this. That's the line in the sand, and you got some wicks. You're looking for like clean stuff like this. It comes back and tags the zone that you want and then leaves. Not waffling around and bouncing around, especially at a 10 o'clock time frame where things can reverse on you. You have a 9 or 10 o'clock on a turn, so just some things to keep in mind. GBP through that level, we're back into here. So you want to see that start moving higher. It's going to get some legs now. It's got to start going. You don't want to see it get through here. I'd have to see it break through here. Take this, find support of that line again, and send it up. Or you'd have to see it break market structure down here. So you got a few minutes to wait for something to happen here. There's the retest again. You want to see that go higher from there. Be just below that. So my error is that I usually have to wait for a body to get above here. I'm jumping in early here and paid the price. Wait for this SIBI to let go on the downside now, and then your pound. Look at that job. That's a 5-minute chart too. Put that on a 1 minute. You move choppier. Retest. Send it lower. Look for this level. Right back in the discount box. Gotta wait for it to break through here now. It's got to get through here and obviously break through the high there. And you want a distinctive displacement candle, not just these little wicks chopping their way through. Look at that mess. It's a slow grind higher, but it's these wicks are coming back, chop you up. Are you catching any of these, Hadi? You got to really give it some legs. So you got to keep your leverage very low. Oh, that's gold. We're marking up gold. GBP is what I'm supposed to be marking up here. So now this looks lower. This is the no-go zone now. This is your typical change in direction now. Around 10 o'clock, we got some equal highs there to come back and get later. Now I need to see it tag in here. So before it takes that low, you want to see it, a candle close below here, and then use this as support to come lower. Look for range extension, go to break even. There's one short there. You got all this whole zone right here. So unfortunately, you have to be above that zone. Your no-go zone starts here, ends here. As soon as it takes out that low, you move to break even. That's already done its thing in there. So I'm going to go to break even. I don't want to see this mean threshold get closed. Again, this is the same situation I did up here. We have not broken that high. We have not broken that low. So wait for the low to get broken. There's the range extension right now. So you'd pay yourself a portion there. Now I've got 1, 2, 3, 4 arrays now. I want to see this thing close below here. And those 4 arrays I'm looking as padding to protect me to go lower. Sometimes, again, the wrong decision was I should have waited for the high to get closed below or above. I didn't. I got in because I saw the body go above that, and that sometimes works really quite well as an indicator to keep pushing higher. So then it reversed on me with this big ass candle you saw. Traded right back through that area I didn't want to see it trade through. We didn't trade back to it. We just kept coming through the next zone, traded through that, came back inside it, tagged the no-go zone, and then ran for the low. So pay yourself there. You can take a portion off there. I've only got one on, so now you've got 1 array, 2 arrays is the midpoint right there. Watch to see what kind of reaction you get off of it. 3 is the bottom of it, and then 4 is the midpoint, and I'm just above the midpoint. And typically, if you get 3 arrays all in one candle, your ass is next. So watch that candle close now. And it should be like running away here. So now I'm going to leave this one sitting right off a tick or 2 above this low here. I don't want to see it come back up in here again. Otherwise, I'm not interested in that. I'm demanding like very specific price points here. Like that's the tick right there. And I'm okay. Not giving me what I want. So wait, look for the mean threshold here now. That would have been the 4th and final one right there, and it would have got me. So you see how we're getting that. We ran the lows out, but we have not. We're getting a bounce off this level here again. And I didn't want to see us come all the way back that high. So if we trade through here, you still got this no-go zone here, all from model 4 for continuation on the downside. So you can come all the way up into, so I don't want to see, you don't want to see it break through here, but this is the no-go zone right here. Right up to 14.99. And see how the body's stuck right on the midpoint there? Right on the midpoint. So now you want to see, do they roll over and keep coming lower? I've got nothing in here for a reversal just yet. So it should keep coming lower. So model 4 is all the way up into here. Roll over and keep coming lower. So now you say to yourself, what would be a reasonable expectation for an entry? If you're using a model 4, you're looking for anything in the premium range. So above 50, 60, 70% would be an optimum trade entry reversal right off that point there. So you can put your stop loss just above that. So your risk would be very, very small. If it pushes through that, it's not what you want, right? So wait for a return into this range here by 50% or more. Or wait for this low to get taken and then use that as support. But I want, well, how it takes that low is important as well. Do we have a nice displacement candle, or is it just another quick wick through? You typically want to buy a premium and sell it at a discount. So if you're going to look for a reverse here, look for a tap of that, and then you can wait for the next reversal in here, which is the next displacement down, pop back up, and then continue to run lower for confirmation that you've run here to the premium. Or you can take it with a very tight stop loss. You don't want to see that little skinny level there get taken on a close. And we continue to chop around inside here. Right on the bottom of that 4 hour there. And we have a BISI right here. So I would like to see if we're only coming down into 75% of this BISI here, and we're going to reverse. Keep your eyes on a 15-minute or an hourly. Look for a retest of, if you want to keep pushing lower, 99.91. Or the consequent encroachment 99.94. And then look to see if that continues to run lower. If we take this candle out on a close, 100, then look for it to run back up into this 118 cents. That'll put downward pressure on the euro and the pound. So if this is just running back up into a low, these equal lows here, and this order block here, and the consequent encroachment 999, 94, what would that put us in for this guy? $132.85. 4 hour. That's what I want to see the next hour or so. Now, if this has got some legs, you want to see this stay open. And then the next hour, which would be 11 o'clock, look for an institutional order flow entry drill. Don't even touch that and watch that go higher. Then you'd be targeting higher up inside this range for you're already at 62%. So already in an optimum trade entry reversal time and price for a reversal. So lower time frames, you start looking for those reversal situations. So you'd have to break here or back up inside that no-go zone again. And we're already working in the upper portion of that no-go zone. So small little fair value gap forming in the hour, or small little order block candle. And then the next hour, you see a little wick down, and that's where it starts to make its move in the next hour. Unless this drives all the way down and tags this high and fills this fair value gap, which I don't think it will. I think that'll form, this would be forming a BISI here right now. Then you look for a retest and any opportunity to catch a reversal here in the next hour. It's kind of like what you're looking for. So you got another half hour at the bottom of the hour. This is the crazy Ivan time. How come they're not letting my no access to the script? Oh, let's close it out and see if we can find it again. There we go. There's the 27 candle. The start of our crazy Ivan. We're down in the discount portion now. This is our 32 candle, or 3032. Body's traded below. Yeah, we got a body below here now. Look for 50%. And then start coming lower. Nice. Pay yourself here. And you would have moved to break even. So where if you got in on the middle point there, pay yourself, move to break even. And now you don't want to see this candle's mean threshold get taken. A retest right there is perfect. Keep coming lower now. Right there is perfect. Delicious. Perfect point right there. Now, if you were, as soon as you take out that low, you pay yourself and you move to the previous low. So right here. So you've paid yourself twice and now you're risk-free. Let her buck. We can retest this whole zone here again now. So the no-go zone that was up here is now down here. You've hit it once, so you don't want to see it. You get retested again and again, right? So now you'd be out. You paid yourself at the low. You've got this all sitting inside that zone. So there's the retest. Only 10 of you in here this morning. Hey, I do like this continuation. I want to see this breakthrough here now. Get through some market structure shift and then start really seeing this drop back down into this 24.6 to 24.5, 6, 7, 9, something like that. Okay. That's a nice little no-go zone there for a lower. Euro going lower. Pound, I want to see the pound start right there and start coming lower. Nice retest. That's a really nice Model 4 right there. Hopefully you guys caught that. I spent too much time on pound. There's the test. I can send that lower from right there. And we're going to target right here. I want to be above that no-go zone again now. There's Dixie here. You want to see this roll over here now start going lower. That would push this higher. So you gotta be careful here now. I don't want to give it that no-go zone now. I want to see this mean threshold hold. Got to be careful of this right here. Because if that Dixie rolls over now, if that rolls over and comes lower again after connecting from here, then pound is going to start to reverse and go back up higher. And so is euro. Because they're hitting their level, or euro's hitting its level. Pound's hitting its level. So if I still want my short to continue going shorter, that has to start driving through this level here. It's taking out the low, so I should go to break even right there. And we're really, so it's got to be tight now because of that potential for the turn to occur right here. And we're right in the middle of this range already too. So you have to kind of take all these factors into consideration here. You're already over the 50% line. So if you're using your take profit model 1 right now, which I guess we could continue it from here, you're at break even, cost of the trade. You take a portion off there. So let's kind of just follow the rule there. We'll take one off there. Oops. So now it hasn't cost us anything. You've made $100, and now we'll see if we can get a continuation here. So we'll take another one off at 62%, and then you'd move your stop loss to 50. But because we got in right at 50, you got to protect yourself at the next nearest low. But it's a stress-free trade now, so you just let it run. Our target's down here. We're looking for a box-to-box trade now. Oh, we're out. Keep your eyes on this level down here. Some of you might not like my stop losses being so tight. That's because I'm demanding very specific levels, and you might not like them. You might give it a little bit more freedom, then give it a little more freedom. That's your choice, man. That's how you're going to trade your Don't let me influence you. Don't let anybody else influence how you read your market or how you set your entries. But whatever the rules are, stick to them and be consistent. Every time I re-engage after I catch a run and get stopped out green, they always stop me out because my stops are tight because I'm protecting prior trade gains. Yeah, if that's your logic, if you're trying to protect your money instead of protect a zone, look at it as this, Lucky. Look for, if you're trying to protect money, you're trading in fear. If you're trying to protect a zone, let's say, or protect a data point, that's, to me, more of a logical place to put your thoughts instead of worrying about losing your money. Otherwise, all you're doing is just saying, I'm going to nibble every little piece in there, and if it starts coming back, I'm taking my money. Instead of saying, here's my data point. I'm looking for that to find support at that, and that's it. If I don't, and it goes through that, I'm not interested. So I'm going to protect that data point and say, that's where my stop loss is going to be. I needed to come back and tag that midpoint of this candle. That's as far back as I want it to go, right there. Right? And then it's got to go lower from there. So you're protecting that data point. If it goes beyond that, you say, I'm not interested. But that's the level of precision you want to make and defend a level, not the loss of gains of your money. Otherwise, all you're doing is just trading fear. You're just trading, I'm losing money. And you're staring at the freaking price over here and saying, I'm losing money now. That's not trading, man. That's gambling. Have a defended point that you for sure want to see defended. If it doesn't, then the price is not acting the way you want it to act. And if it constantly does that, then you need to study price action cleaner or longer. And you got to get out of that whole defend your money position instead of defending a position. Look at that midpoint right there. See that 32.95? So your stop loss would be like right there. If I'm defending that position, that's got to hold. So I want to see that low get taken. Does that make sense? If you don't have it yet, stop trading live money. Stop trading live money because you're not in the right mindset. All you're doing is reinforcing a really shitty way for your brain. No offense. And believe me, I say this with love. I don't say this as a judgment. It's a shitty way to train your neurology in your brain because you're training fear and adrenaline, and you're not trading a specific setup. And if your brain doesn't, if you're hooked on fear, you'll always react with fear. No matter how many times you're in the charts, you constantly keep looking over here instead of staring at your data point and saying, I want my points. I got to understand my points better. And if they're not defended, then I'm done. I've got to move to the sidelines and wait for either a clearer understanding, clearer price action, or I don't know what the other or is, but that's it, man. You've got to defend a position, not an old profit. And if you're saying you just haven't got there yet, then you've got your answer. Stay the hell out of money. I had somebody contact me last night and said, can I trade off of your account? It's like, no, you can't. Can I, which proc firm are you using? Which account are you using so I can start putting some of my money in. I'm like, no, you don't even know what you're doing yet. If you don't know what you're doing yet, stop trading live money. I tell you this because I've been there, I've done it. When I took Michael's course back in 2016, I was in his first mentorship. And within a month, I thought I understood it. And I was trading live money. And I was dropping $1,000 bills. And I lost tens of thousands of dollars in a very short period of time, trading thousands of times. I think I traded 2,000 times, 3,000 times in the time that it took for Michael to trade 2 or 3 in the 3 months. In the 3 months, because we were back then, markets were not acting the way he wanted, but I thought they were great. And he wasn't taking any trades. He was like, I don't like this. And I'm like, I love it. It's good. And I was trading stupid money. And I lost a lot of money that way. So if you don't think you're ready and you don't see it yet and you're acting out of fear, you should not be trading this. See how it's not acting the way you want it to act? That midpoint of that candle right there. See how it's trying its best to defend that level? So if your stop loss is sitting like right above it and the bodies are respecting it and the wicks keep trying to get through it, if they blast through and take you out, then you say, look, this is not the price action I want. I want to see it tag it and leave. Is that tagging it and leaving? No. So your stop is sitting right there and it's waiting. And if it gets tagged, which looks like I'd be out right now because I don't like seeing it waffling because it's still not acting the way I want it to act. I want to see it tag it and go. That's typically what you want to see. So if it rolls over here and goes now, I'm not going to beat myself up over that. I have, however, caught a short over here in NASDAQ. I want to see that continue to play out. Right off of the 830 this morning. I need the emotions in my trade to conquer. Yeah. I thought you were saying I need the emotions in my trade. No, you don't. To conquer, yes. I trade small. Ugh. That's gambler's talk right there. I trade small. In other words, I'm willing to risk more money for my pardon for lack of a better word, my ignorance in the market. I'm willing to take these small little punches to the gut. Take no punches to the gut, man. 0 punches to the gut until you're ready. You don't say I can take a death by 1,000 cuts. These little tiny cuts, I can handle those. No. Because those little things will slowly nibble away at your account, and then 6 months from now when you go, man, I've lost thousands of dollars with these little tiny cuts. But I'm getting there. That's a gambler's mentality, man. See how it hasn't acted the way you want it to? Pop it through, you're done. I always use money to trade. All right. Well, you've heard my thoughts. Good luck with you. Trying to teach lucky dog tricks. Yeah, well, good luck with that. I won't harp on you anymore. Good luck. Do your thing. So 132.98, 133.02. I remember, man, it's just all for love. I'm not trying to beat you up. Michael gave me that advice years ago, and I didn't listen and lost lots of money because of it. It takes a long time to get it back, if ever. So be careful. You're welcome. Now, here's another interesting thing. You see how that midpoint, I was telling you, I wanted to see that midpoint get defended. See how the times he kept trying to get through it? And then watch. I'll put a line on there. Watch how that line right there. Watch what happens when we break it with a body's close. We close above it. And look how we use it as now a launch point. So you got to look at those little central points and how you do not want to see them get broken. Tag, 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 tag. Finally broke through it. Say, guess where I want to go? I want to go higher. So now we're starting to run higher. Watch for this SIBI here. Now you want to see if we close above that. If we close above that, then we're looking for this to provide support, and we're inside the bull trap. So you want to see the next spot break the midpoint right there. There's the midpoint right there. Then you want to see a body get above that, and then we're back inside this range again. So you're back to sloppy price action. Ex-jock used to coaching, helping me. No emotions, just skills. How do you look for a new area to short again? A new area to short off of? I'd be looking for right up in here. Midpoint right there. If we get above here, look for that. If this holds and we close back through here, so we got this little point here. So you always have to remember where are you inside your range? What data points support continuation? What area am I looking for a short? I'm looking for a short up here because it's in the premium portion of this small range here, and it's box to box. So it'll be here all the way back down to this little box. Use that as support, and then this would be the next price leg lower, and I'd be targeting down here again. And we're getting at 11 o'clock now, so this would be a nice little chance to see a reverse occur at 11 o'clock. So we have not yet broken this, so wait for that to get broken to the upside, not, and the mean threshold sitting right in it as well. So you see how that's just tagging like it did down here on that. Tag, 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 tag. It'll let you know when it pops a body through here. Then look for a retest of this, and then look for a run higher. So just watch, just watch. If that's not what's going to happen, then reevaluate where you are inside your range and look for the next data point you want to see it key off of. So we're that little guy, remember I mentioned him earlier? I want to see a body close above that. Look at that. We're not even closing above him yet. We haven't closed above that. We haven't got a body above here yet. They're all just sitting there flat right on top of them. Looking at the midpoint of that candle now, the little tiny guy right there at that data point. I'll be looking right there, 32.96. Right with that little 58 candles landing. I'll start going back up. It's a beautiful thing when you see it. If you know what you're looking for. So now you don't want to see that get broken now. So you don't want to see, when you see this candle starting to go burp, 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 come back down again, not what you want. I want to see that hold and then go higher. If it pops through there, I've got nothing else left except for a run back down here. No problem, Lucky. I'm here every day for you. I just poured coffee all over my face. Well, at least for this week anyway. Next week I won't. You have to catch me in England next week. I will see how that point we just talked about right there, we wanted to see it hold. Was that coincidence? Was that just some like random chance that I just found that data point? And look at that, you broke the high, you'd be moving to break even, blah, blah, blah. If you see it, if you understand what it is you're looking for, you'll see it. And those are the kind of demands that you have to put on the market. Those are the demands you have to put for a data point. And if you understand them well enough, you'll see that, okay, that's the point I want to sit on. Well, you're all thinking it's going lower. That's the point I want to see it hold to go higher to that other zone that we talked about here and here. Now, see how we've cleared above that level right there? I want to see it come back and give it a little kiss right there. There, all the way down to here. And now let's send that higher. Leave that open. That's what I want. If I get that, great. If the next candle comes down and just goes boop and just taps into it and leaves that open, I'm okay with that too. If it fills it, I'm okay with that, as long as it doesn't close below 13298. If it takes that high, you're at break even. Let it run, because you don't want to see, now it's come back into that zone. You don't want to see, it can fill it. See how it's sitting right in the middle of it right now? Well, pretty close to the middle. That's the middle right there. This little candle, you traded above it. It's high, it's open, and it's mean threshold are the three levels you don't want to see get broken. And if one candle goes through all three of them and closes, look for your ass next if your stop loss is sitting here. So watch right there. These are specific points, and this would be no different than if this was a daily chart. So those of you who are looking at going, that's bullshit, I'm not watching that stuff on a 1 minute chart. This, imagine it's a daily chart, imagine it's an hour chart, whatever chart that you're trading on. See, there's one, there's two, there's three, your ass is next. All in one candle. Look for this low to get taken if we close below here. 8 seconds. Run above a high. See this little bissy right here? Body's close below it. See how we just, I haven't quite tagged it yet. The high on that candle is 32.98. The high on this candle is 32.98. So that's the tag right there. Now we have not closed below this level yet, right? We've just had some wicks. Watch here. If we start closing inside here and start to roll over again, look for a run on the lows here, because we've got a high taken right here. We've got a bissy formed. We've traded below it. We've traded back inside it. Now I want to see it come lower. If we close back through that, then you got to wait for it to start pumping higher. But that's a little key zone right now. See how its body is respecting, or the wick now is respecting that. Now I want to see it take this low. And if this candle here closes above that level again, then you're back to hunting for rejection block, old high. This is the consolidation. So you have to find where it bounces inside consolidations as well. So ask yourself, do I want to trade inside all this crap? Right? Otherwise you're saying, I want to go short. Now I want to go long. Now I want to go short. You've got to be prepared to stay on the horse and watch how it turns on you. And that is a turn point. So wait. Don't get psyched out. This is a psych candle. Wait. Make your decision at the end of the candle. Not while it's moving. Otherwise you're going to go, it's bullish, it's bullish, it's bullish. And all of a sudden it comes back. You go, oh, it's a shitty wick and it took me out. Damn it. Because you are the cat chasing the red dot on the wall. See how now we've traded above that level? So watch. Stay on the horse and just watch. Watch that level. If we come back and tag it, you want to see it go higher. And if it chops around through it again on the downside and closes, look for the low. Stay on the horse. It's spinning and it's jumping back and forth right now. And there's only one data point to run off of, and that's the premium. I have no discount anywhere inside here to run off other than a change in direction. So if it takes this candle out now on a close, I look for this candle's 1, 2, 3 data points and that little area right there as my continuation lower. It's got to close below here though. There's the run on liquidity right there. Watch where the body ends. If we're still above here, that's a quick little stop run and then send it higher. See how the body's still above there and right there? Look for half this wick now. Nope, still going. I've only got one here. If I had a Sibby I could hunt for, I could say, yeah, we're hunting for an old Sibby back down here as well. This is just chopping around here. So you're asking, if you're asking yourself how you're going to trade that, you're not. It's just too choppy right now. Those little points have given up and they just keep wicking through them. So you don't want to keep taking a hit there, right? Oh, you bought MOS. God, I was buying MOS years ago. Fertilizer company. Yeah, I know what the one you're talking about. I bought MOS at 21 bucks. I remember MOS. Geez, I haven't looked at that one in ages. Let's look at that one. Archer. Yeah, I thought I had a double Robin Hood here. Okay, let's go with MOS. I haven't used MOS in a long time. Mosaic. Mosaic has a Canadian one too, a TSX, TSE. I had it back here though. You'd have to go back weeks and look in 2020. I had it at 21 bucks. I bought it back here before the big dip. I had it at $21, somewhere around in here, and it went down and I was like, no, and it was down here at $6 and I'm like, I'm so dead. And then when it finally came back up to $21 again, I think I got out at 26 or 27 bucks. I bailed right there. That scared the crap out of me. I was like, and I wasn't really watching my setups, right? But if you look at your setup here, look at this mosaic. So if you look at the precision of this level here, okay, that's the Sibby. You want to see broken to the upside. It's broken. Look at that. It retests it perfectly there at 1605. Go long. You're targeting your, that's model 1 reversal. Model 2 is an internal range liquidity hunt. Model 3 is right here. There's model 3. And you're saying, I want to see this. You gotta go right to the bodies here now. We've decided we're going to start using these bodies. So your internal range liquidity hunt is done here. Then you look for a run through here. So that's right there. You get out of your trade. It runs higher. You're looking for range extension. It gives you range extension. If you hadn't left a piece on to run for those old highs, you wouldn't have. You would have got the internal range liquidity, and then you say, now what I'm looking for is a model 3 or model 4 continuation. So you wait for the retest of the candle's high, its open, its mean threshold, and this zone right here. And look at that. Boop. Taps it right here. You've been scaling in on your thing. Your stop loss is sitting just one tick below that low, right? And you're scaling in, and then all of a sudden, look at the juiciness of that little run. So this is my concepts on stock. That's a weekly chart, by the way. But that's my model 4 continuation model. You have model 1, model 2, model 3, which you didn't get an opportunity to get here unless if that had not broken that high, you'd be looking for a model 3, a retest, then look for an extension, then model 4 is a retest and a continuation. So that's all 4 trade models. Do the same thing on the upside. You pull from, if you did the eye to the body, then the body here. Oops. You wait for a body to break through this on the downside. So what we did here, we're looking for a model 1 reversal. So there's your first attempt. It keeps coming. Second attempt, body trades through it right here. Comes back in. There's your short. Layer in 1, 2, and 3. You go short. You're inside this larger range. And we're going to go all the way back to the last up close candle right here. In this particular case, it's a not a breaker, but a, Jesus, my brain's slipping here, mitigation block. So that'd be like a last little run up here. You know, I know Michael uses all of them, but I like the last one for the most sensitivity. Draw it out. That guy right there. Bing. Hit it nicely here. We get a reaction off of that right back inside this range. Watch the 50% of the range when you're tracking back. Sorry, let me put my control button here. There. Oops. Right there. 50%. There's your 50% retracement back into the range again. So you want to see your no-go zone get broken through. It also came back into our little first retest. Hit it again. I want to see a body break through here on the downside. It does. Comes back, retests it, goes and takes the low. So it's the same thing. And that's a weekly chart, you guys. You could stay in this thing for weeks and months on end. As long as you understand what it is you're looking for. I'm showing you on a 1 minute chart in a foreign currency. And I just showed it to you on a 1 week chart in a stock. How to trade that. So if you don't see the logic of it, then, you know, you need to find somebody else. You need to find some other person that supports your trade style. Simple. Simple, simple. And it works on everything. That's why I know that these principles work, because it works on any asset. Any asset. Which one were we on? GPP, right? So you see how that midpoint right there? Remember I said the midpoint is important? It hit it, came all the way back to the midpoint of this right there. And now you want to see, does this provide support and send it back through that level? It does. Now I want to see this level provide support and send that higher. And I'm right up inside that no-go zone again now. See how the no-go zone, this old no-go zone right here, body breaks above it, you come back inside it. Also, there's a little bull trap sitting right in there that you expect to see if it gets broken to the upside inside a bull trap. That's a nice little support mechanism right there. And then send that higher. That's really nice. Anyway, I think that's going to be it for me, you guys. I hope you've enjoyed your show today. I know there's only 8 of you in here, but I appreciate you sticking around. And I will see you guys tomorrow. That's it for me. This has made a nice little run back up into the middle of this range here again. Lots of places for it to reverse off of. It's 11 o'clock reversal, takes out the high. Now I want to see this keep pushing lower here if it can, and not just bounce off of here and send it up higher. So there's that little zone there. You want to see that get broken to the downside at 681, not supported if you're looking lower. Any questions before I leave? Anyone? Anyone? Nope. Well, hopefully you got to learn something there this morning, and I appreciate your time. Thumbs up, like if you like it. Subscribe. We're here every day for you, and we'll see if we can't get something going the rest of the week. So stay tuned. I'll see you guys tomorrow. Thanks for tuning in. As usual, send in the love, my friends. Take care out there, and I'll see you tomorrow.